Good evening, everybody. This is the last session, but we do hope to stimulate some debate. So I'm going to actually, I'm going to hopefully make some slightly controversial comments, and hopefully we can turn that into a good debate later. And of course, Mushtaq asking an awkward question means that sort of there's a few people need to get him back as well. As you'll see from the CV in the packs, I got involved in Islamic finance back in 1995, which, as a lawyer said to me recently, was long before it became fashionable. And I think that is a danger, that it has become a sort of almost a commodity, and as Volaw pointed out very well in the previous session, there's that sort of element of book learning that, or going off and doing a course rather than actually sort of getting your hands dirty and really getting involved. There's thought number one. My role in all this, though, is rather different to most of the other participants today. I actually structure the vehicles that are used in Islamic finance and then administer them. That means I have two customers, if you like. I have, first of all, of course, the customer of the promoter, or the person who's actually putting together that structure and wants us to administer it for them. But more importantly, and certainly as far as our regulator is concerned, my number one customer is actually the investors themselves, the clients, the end users of these products that we're actually looking at. So what am I seeing? What is the demand? Where are the, what is the investor looking for? It's very, very different in this environment, this early 2010s sort of environment, to what we saw back in the early 2000s. In the early 2000s, it was high rates of return and ignore the risks. Capital preservation is the number one thing that investors that in my experience anyway, investors looking for. They don't want their capital put at risk. That does not mean they want it guaranteed, which is obviously haram, but they don't want it at high risk. On the other hand, they still would like a good return. So bricks and mortar, that good old solid asset that everybody, that certainly seems to be a major flavour. I've mentioned risk reward. Risk versus reward is certainly possibly the next area. And as Richard Thomas mentioned earlier, that risk-reward, of course, is often distorted by that horrible thing called taxation. From my perspective, of course, from that little island about 150 miles south of here, that's what I do. That's why I'm in business. So, I like that distortion of the tax aspect. And then Sharia compliance, and I'm afraid I've come down. Sharia compliance is almost the third thing that I believe an investor looks for. But the Sharia compliance must be with a level playing field, and we've had a few comments today about the differences you get between the different scholars and the different schools. But then again, I would be very, very against having a totally codified Sharia compliance aspect, because where would we go with innovation? We would not have any innovation. A few weeks ago, I had a very, very illuminating discussion with a young Muslim who, when I told him I was involved in Islamic finance, and once he'd taken one look at me and thought, why is Trevor involved in Islamic finance? The next thing he said to me was, well, it's not real anyway, is it? That's a bit of a damning statement, a young, and this young lad was very, very devout, and he just said, it's not real. Or if it is real, it's certainly not for me, it's only for the rich. And I think that's one of the problems we have, in that a lot of the products we've talked about and a lot of the products we see are designed for the institutional investors or the super rich investors. And if you look in the UK, we have 5 Islamic banks in the UK, or should I say you have 5 Islamic banks, because of course I'm not from the UK myself. You have 5 Islamic banks in the UK, but only one of those, Islamic Bank of Britain, really offering retail banking services. And the question that I would like to ask is, why isn't there more retail-based products? If we move over into the form over substance debate, and again the area where I think sort of, you know, the areas that I've seen sort of die almost in the last 5 years is Sukuk. Sukuk, as Richard Thomas said earlier this morning, was, you know, was sort of almost the great hope. It was the methodology that those of us involved in the industry saw for creating that secondary market, for creating sort of the liquidity market between banks. I fully understand the reasoning behind Sheikh Taqi Usmani's paper, and unfortunately some of it of course was widely misquoted, but there was an awful lot, you know, it was all very valid. But just to come back to a document that I actually read and have read many times, the sort of AOFI ruling on Sukuk. And if one actually, please, those of you who've not read it, don't worry about the first 3-4 pages. Just go to the very final paragraph, and there's a call there for Islamic financial institutions to get back to sort of eliminate or to reduce significantly the amount of debt-based transactions they're involved in, and to get back to profit sharing and sort of in the true meaning of Islamic finance. Thank you very much.